Our next topic is on the general ledger. The ledger is a collection of all accounts and their balances. This is different from the journal because the ledger lists each account individually. The journal lists every transaction in order, but let's say I want to know how much customers owe me, the accounts receivable account. It would be really difficult to look through the whole journal and add all the accounts receivable transactions together. It would be time consuming and maybe near impossible if there are thousands of transactions. The ledger will have the accounts receivable account and all the transactions that affected that account with the final balance. The chart of accounts is an easy concept. It is a list of all accounts that the business is using. I always say to think of the chart of accounts like a table of contents that you would find in front of a book. This way, when making an entry, you can look through the different accounts you have to find the appropriate one. We had one bookkeeper send us their books before, and they had an account called salaries expense. Then another one called salaries expense in all caps, and another one called salaries and wages expense. It was all the same account, but they just kept making new ones instead of looking through their chart of accounts. We had to combine all the accounts together into just one account. The chart of accounts is related to the ledger because all these accounts will have a ledger account and balance. For instance, cash is account number 101. I would go to the ledger to find account 101, cash, if I wanted to know the balance. It does go in order where assets go first, then liabilities, then the equity accounts, including the revenues and expenses. Usually, the first digit lets you know the type of account. These account numbers can vary and do not have to be the same for every business. However, they usually follow a similar order. I have seen very large companies start at 1001 for cash instead of 101. Now, while I have the chart of accounts shown, I do want to go over two accounts that I have not previously covered with you. I normally like to wait until chapter 3 to cover these accounts, but you might see them in your assignment. The first one is prepaid expenses. Here we have prepaid insurance. I want you to be aware that this is an asset account. It is like paying for your insurance 6 months in advance. It is an asset because it's a resource that you have not used yet and is still worth something. In chapter 3, we learn what to do when the time passes and it expires. It does not have to only be insurance, though. Businesses can prepay for rent and other expenses as well. The second account I want to bring to your attention is unearned revenue accounts. Even though it has the word revenue in the account name, it is actually a liability account. This is when the business is paid cash in advance. The business receives cash but has not completed the sale yet. The business still owes the service to the customer and is in debt to the customer until the work is complete. We will learn more about this account next chapter. As I stated on the last slide, the ledger will maintain the account balance of each account. Each account is listed separately, so they are not all mixed together. Let's take a look at what the ledger looks like. This is an example of a cash ledger account. We have the account name at the top, along with the account number of 101. The first column would be the date of the transaction. The second column would be the explanation. Please note, in my courses, I do not require students to write in explanations in the journal, so you would not need to put it here either. For my course, you can leave it blank, but in the real world, you can write in explanations. Usually, I don't see too many explanations unless the bookkeeper wants to put in a note such as a reference to another transaction. Next, we have the debit and credit column. Here you are just copying the transaction from the journal. The last set of columns would be the balance in the account after the transaction was made. This is exactly like looking at your bank account. When I look at my bank account, I can see all transactions that I made, whether my bank account is increasing or decreasing in cash, and then what my final balance in that account is. Now, I do something a little different than what you might see in the textbook and in the real world. I have a debit and credit column here. Normally, it's only one column, the normal balance of that account. Since cash is an asset and assets have debit balances, then the balance column should only be a debit. Otherwise, it would be negative if it was on the credit side. I keep both columns so that you, the student, can specifically let me know what the normal balance is. It's just a way to learn the sides even more. This may seem a little confusing, but we will do the practice problem next, and by the time we are done, students usually have a very good understanding of this topic. Also, in the real world, when using QuickBooks or other software, it will automatically post the ledger for you. But it's always better to understand how this works by learning a manual system. Also, when you transfer the entries from the journal to the ledger, we call this posted. We post to the ledger. We're going to be working on part B of problem number 2 next. I have all of the accounts, a general ledger for each one, and on the rest of the pages, I have the rest of them. Like here we have cash, accounts receivable. I have the account number. With the date column, we're going to put in the debit and credit from the journal and then update what the final balance would be. Since this is the first time this company has opened, the example that we're doing, there is no prior balance. But if this was a company that was already established, our first line would be the balance from the end of the prior period. Also, normally when we do this, whenever we make a journal entry, we will automatically come to the ledger and put it into the ledger. In this case, to make things a little bit easier for us, we're just going to look at all the transactions for the month and update each ledger account one by one. We're going to start with cash. Let's go back to the journal and look at all of the cash transactions that we did. As you can see, on April 1st, we used cash when the owner invested money into the company. We're going to take this cash entry, it was a debit of $80,000, and put this into the ledger. We will put in the date of 4/1, copy the journal transaction exactly as it was. It was a debit of $80,000. And now what's my balance? Think of a bank account. If I put $80,000 in, what is my balance? It is now $80,000. Since cash is an asset, the normal balance is a debit. We should not be using the credit column for cash unless cash went negative, but we're not going to have any entries where that happens. Let's find the next cash entry that we have in our journal. When you scan your journal entries, you'll see on April 6th, there was another cash entry for a $4,000 debit. We're just going to copy this $4,000 debit and then update the balance. First, let's put in the date. This was done April 6th. We already have April at the top, so we can just write the 6th here. We're going to debit it for the $4,000, just copying it right from the journal. And the part that we really have to think about is now what's my new balance? Remember, we're looking at the cash account. Cash accounts are positive on the debit side. We had put $80,000 in, and now we have another $4,000 in cash that we received. What would my new balance be? When it's on the same sides, we add. There was a debit balance, and then we did another debit. Two debits will give us a bigger debit. It would be $84,000. Just like if you deposited $80,000 into your bank account and then another $4,000, your balance will now be at $84,000. Let's find the next time we use cash in our journal. We can see on the 13th, we did a credit to cash of $11,600. We need to put this $11,600 credit into cash and then update the balance. The date was the 13th. In this case, it was a credit of $11,600. Remember, credits for assets are negative, which means we took money out of the bank. If we had $84,000 and subtracted $11,600 from that, our new balance would be $72,400. Note that it's still on the debit side, not the credit side, because that would mean our bank account is negative. It's not. We did spend money, but we still have money in the account. Let's find the next cash entry that we have in the journal. Our next cash entry is on the 25th. We have cash here as a debit of $6,000. Let's put that into the ledger next. The date is the 25th. It was a debit of 6,000. What's my new balance? We have a debit balance of 72,400 and we just did another debit of 6,000. Remember, if they're on the same side, let's add. Add same side. 72,400 plus 6,000 equals 78,400. Here are our last two cash transactions. On the 28th, we have cash as a credit of 5,500, and on the 30th, we have cash as a credit of 500. Let's put these two credits in next. The first one was on the 28th. It was a credit of 5,500. So since these are on opposite sides, we're going to subtract. We have a debit balance, and if we did a credit, it offsets it. We subtract these numbers, we get 72,900. Our final entry would be on the 30th. There was a credit of 500. Once again, we're also going to subtract, and we get 72,400 as our final balance. This would be the cash ledger account. It shows only the cash transactions, and we get to see what the final balance is. At the end of April, I have $72,400 in cash. Next, we're going to do it to the accounts receivable ledger account. There are going to be two entries that we're going to put in here. Let's look for them now. As I scan through my journal, I can find the two accounts. On the 9th, we have accounts receivable as a $6,000 debit. And then on the 25th, we have accounts receivable as a $6,000 credit. This is because someone owed us $6,000 and then they paid us. So at the end of the month, we're owed nothing, and our general ledger needs to show that. Let's put these two entries in the ledger for accounts receivable. The first one was on the 9th. It was a debit of $6,000, and our balance would be the same, the $6,000, because there was nothing prior. Remember, accounts receivable is an asset account. The normal balance should be on the debit side. We should never move on to the credit side for a final balance. The second entry was on the 25th. This is when they paid us the $6,000. It was a credit. And since a debit and a credit, they cancel each other out. The final balance would be zero. We are owed nothing at the end of the month. The next ledger account that we have office supplies, office equipment, and accounts payable. Okay, office supplies and office equipment are both assets, therefore the balance should be on the debit side for both of them. Accounts payable is a liability account. We should have a credit balance. We should not put anything into the debit balance side here. Let's start with office supplies. We have two entries that we did. Go through your journal and try to find the two entries for office supplies. The first entry I found for office supplies happened on the 3rd. We have office supplies here as a debit for $3,600. That's one entry we have to put in, a $3,600 debit. The second office supplies entry comes from the 29th. We have a debit of $600. We will have to put this in as well. The first date was on the 3rd. It was a debit of $3,600, and then my balance would be exactly the same, a debit of $3,600. The next date was on the 29th. It was also a debit of $600. We have a debit and a debit, they get added together. It's a total of $4,200. That's my final balance in the office supplies account for the month. Next, we have office equipment. There's only one entry for office equipment. Look through your journal to try to find that date. Here we have it on the 3rd also. Office equipment has a debit of $8,000. This is what we will put into the ledger. The date is the 3rd. It was a debit of $8,000, so my balance is now $8,000. That was a pretty easy one. Now let's move on to accounts payable. This is the first liability account. We have 3 entries. Let's look through our journal to try to find these 3 entries. Our first accounts payable entry was on the 3rd. It was a credit of $11,600. On the 13th, we have accounts payable as a debit for 11,600. And finally, on the 29th, we have accounts payable as a credit for 600. We need to put these three entries into the accounts payable ledger now. The first one was on the 3rd. It was a credit of 11,600, which makes the balance the same thing. And remember, accounts payable, they do have credit balances. The next date was on the 13th. It was a debit of the same amount, 11,600. It's because we owed the 11,600 and then we paid it off. That means our balance would be 0. We don't owe anything at that point. On the last date, it was the 29th. It was a credit of $600. Since my prior balance was 0, my new balance would just be the $600. Therefore, at the end of the month of April, I only owe $600. The next account we'll look at is the capital account, the withdrawals account, the revenue, and then the expense account. So let's look at the capital account first. There's only one entry. Take a look in your journal to find that one entry. The only time we used the capital account came from April 1st. It was a credit of $80,000. Let's put this credit in the ledger next. The date was on the 1st. It was a credit of 80,000. Therefore, my balance is a credit of 80,000. Next, we have withdrawals account. There's only one entry here as well. Look through your journal to try to find that entry. The entry for the withdrawals account came from April 28th. It was a debit of 5,500. Let's post this debit in the ledger now. The date was the 28th. It was a debit of 5,500, so my balance is 5,500. It also works because the withdrawals account does have a debit balance. The capital account does have a credit balance. Next, we have two entries for service revenue. Let's find those two entries in the journal now. The first entry for revenue comes from the 6th. There was a credit of $4,000. We will need to put this in. The next time we see service revenue is on the 9th. We have a credit here for $6,000. Let's put these two entries into the ledger now. The first entry was on the 6th. It was a credit of $4,000. Therefore, my balance is now $4,000. The next entry happened on the 9th. It was a credit of $6,000. We have a credit of 4 and now another credit of 6. They're on the same sides. One credit plus another credit makes a bigger credit. My balance would be $10,000. Those are my sales for the month of April. Our very last account is utilities expense. There is one entry here, should be the last one that we haven't used yet from the journal. This entry comes from the 30th. We have utilities expense as a debit of 500. Let's put that in. The date would be on the 30th. We're going to post a debit of 500. My balance will now be $500. And that's all of the transactions for part B on problem number 2 for doing the ledger. The hard work is really done when you're doing the journal because everything we're doing here, we're really just copying from the journal. The only part we really have to think about is the balance column, making sure we update our balance properly. I see a lot of mistakes where students are either subtracting or adding when they're supposed to be doing the opposite. So just be mindful about the balance column, but everything else should be pretty straightforward.